Let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to spread the word of how BTA analyze the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. Okay, this is going to be our end of day update for the major market index ETFs. And we're going to start out with as usual, with the DIA. Now, look, I can't deny that the market is going on this little relief rally, okay? It's trying to move up again. Well, we got above the 21-day moving average today. That's what we was keeping our eye on, right? The 21-day moving average, we got rejected at it yesterday. And then today, we opened up right on the 21-day moving average. And then we closed above it today for the first time. So you see the 21-day moving average is right here. The white line, which is the 5-day moving average, the green is the 9. The 5 crossed above the 9 now. The white crossed above the green. And we opened up right on the 21-day moving average, and we closed above it. Okay, so for the DIA, the ETF that tracks the Dow Jones, well, we closed above the 21-day moving average today. That's constructive. But look, on lower volume, you see no volume is really coming in. This is telling us that the institutional investors are not really buying into this thing right now. I don't know how else to say it. Yes, we closed above the 21-day moving average, but it's happening. We have a rebound rally on low volume. A rebound rally on low volume. That's a form of weakness. It looks like strength, but it's actually a form of weakness. Now, for our structural chart for the DIA, granted, we are closed right on this downward trending trend line going across the highs. You see this right here. This downward trending trend line going across the highs. We closed right on it today. Okay, we rallied up to it and we closed right at it. So the market is trying, the DIA is trying to rebound, but it's rebounding on lower volume. Look, it has to prove itself to me. I'm going to have to wait and see. I'm not going to get too excited about what's happening here. Hey, this thing might run back up and start rallying. And who knows? This might be the time it goes back to the high of the date of the inverted yield curve, like I was saying. It might run back up to all-time highs. I don't know. But I'll tell you one thing for sure and two things for certain. It's going to have to prove itself to me. And it's some weekly levels that we got to look out for. The weekly chart is in control right now, as far as I'm concerned. Okay, we made it above some of these daily levels, the moving averages. We're breaking above some of these horizontal support levels and resistance levels, and we're breaking above our trend lines, downward trending trend lines on the daily charts. But we're going to have to take a close look at the weekly charts. So for the DIA, I had to admit, it's trying to rally, but it's rallying on low volume. Let's look at the on-balance volume right now. You see that volume line for the on-balance volume? You see that? Okay. Does that look like this thing is getting hit out the park right now? You see, the green line is the line of closing prices right here. This is the green. This is one of the previous highs. This is another high right here. Okay. Well, look at the on-balance volume. It hasn't gotten above this previous high, but its previous high, but price has. And look right here, it's just barely getting above this most recent peak right here. Okay, well, listen. At the end of the day, the volume line for the on-balance volume is still pointing straight down. The accumulation distribution is trying to move up, but look at the price volume trend. So the only thing it's moving up is accumulation distribution line. But the on-balance volume line is our main key indicator for our accumulative running total of volume. And you can see the on-balance volume line is not hitting out the park. Let's go straight to the guppy. Now look, we got above our shorter term, faster moving averages on the guppy. Okay, we got above the green, the shorter term, faster moving averages on the guppy. But look at the magenta line of closing prices. Look at the magenta line of closing prices. It's right at the red moving averages. Remember what happened last time it got inside of there? It collapsed, right? So look, I'm just saying be careful. I'm not saying this thing can't rally. All I'm saying is that you want to be careful. When we look at the weekly charts in part 2, you're going to see some levels that you might want to be careful of, right? So now let's look at the Standard & Poor. Let's look at the Standard & Poor. It rallied today 1.3%. The Dow Jones was up 1%. The Standard & Poor went up 1.3% today. Okay? Well, look at the Standard & Poor. Okay? Does it look like the volume is really hitting the ball out the park right now? This is what I'm telling you. This is a rebound rally on low volume. Look at the volume. Look at the volume line. Look at the volume of bars here. As prices are going up, look at volume. So we got a rebound rally. It's rallying up, but on lower volume. The volume is not coming in that big. It's not telling us that large institutional investors are really buying in very strong right now. No. Look at the yellow line, the 21-day moving average. Well, we opened below it and we closed above it conventionally. No doubt about that. We got above it. We found the low right and found support right at the 9-day moving average, the green line. The white is above the green, so the 5 just crossed above the 9. But look at the volume, y'all. Look at the volume. Prices are moving up. Volume is moving down. That's not what we want to see, a rebound rally on low volume. It got to prove itself to me, all right? We're going into earnings week next week. We're going to start earnings week next week. Listen, a lot can happen, all right? A lot can happen when the corporations start reporting earnings. Be careful. That's all I can say. Look at the check-in money flow for the Standard & Poor 500. The SPY, we look at a daily chart of SPY, right? The ETF that tracks the Standard & Poor. Well, look at the check-in money flow. It's still in the negative. The RSI did get above 50. It's at 50.53. Okay, that's good. That's really good. But it's starting to move above 50. I don't want to say it's really good. When it get above 60, then I would say it's really good. But at least it's trying to peak its head above 50. But we see it got above 50 before and it couldn't stay there. But let's look at the structural chart, right? Let's look at our structural chart of our key moving average and the trend line. Well, we got above a really key level here today. That I have to admit. We got above it on our structural chart. Let me bring this up and let me see if I can expand this and zoom in just a little bit so you can see it. Okay. Well, you see those internal trend lines, those downward trending internal trend lines that we spoke about yesterday, and this overhead resistance area right here at 384.94, 384.94. This is a daily chart of the SPY, the ETF that tracks the Standard & Poor 500. Well, we opened up right at 384.94, traded down to this downward trending internal trend line right here, almost to the penny. Bounced off of it, got back above 384.94, and we closed above it. That's good. The next level we got to look out for is 393.16. That's this horizontal resistance level right here. This horizontal resistance level right here at 393.16. And then we got this downward trending trend line right overhead. Well, and then we got a long-term weekly resistance level at 397.17. So we got a little bit more overhead resistance that I would like to see it get above. When we get above all of that, well, we know once we get above all that, don't forget, okay, don't forget. Let me bring this in so you can see this. If we get above all of that, remember this consolidation area right here? The last time we got to this consolidation area, it fell apart. So if we break above all this and we get above 397, okay, I want to look for this thing to start consolidating. When it gets up here in this area, you might find a little turbulence before it keep moving. But it's a lot that got to happen before it get there. I'm telling you, it's a whole lot that got to happen before it get up to the 410 level. Look, first of all, it got to get above this downward trending. If it get above this downward trending red 50-day moving average, then I gotta have to start thinking that maybe something is going on here. I don't know, but this downward trending 50-day moving average, look right here. You see this downward trending 50-day moving average? Well, in order to get to this previous consolidation area, it's gonna have to get above this downward trending 50-day moving average. Well, that is going to be a very strong overhead resistance. If we get above that, then I might have to start saying maybe they're trying to run this thing back up. Who knows? But with the weekly charts, it's going to tell us, okay? The weekly charts is going to tell us. We're going to keep an eye on our weekly charts. Let's take a look at the QQQs, the ETF that tracks the NASDAQ. Well, once again, we got above that 21-day moving average. There's no doubt about that. Closed above it. But look at that overhead downward trending 50-day moving average right here, the red line. We're right at it. The QQQ, ETF that tracks the NASDAQ 100, it closed at 294.98. This downward trend in red 50-day moving average is at 297.77. You see that? 297.77. Okay? So, look, downward trend in 50-day moving average can be a very strong overhead resistance level. Let's see what happens when they get there. But for me, I'm going to have to wait and see what happens. I can't. I just can't. I cannot move too quickly. I'm going to have to wait and see what happens when it gets to the 50-day moving average. Okay? So let's look at the QQQs, the structural chart for the QQQs. Well, let's zoom in a little bit. Let's zoom in just a little bit here. Well, as you can see, we got above this overhead resistance. We got above these downward trending trend lines. Okay, we broke above, we opened up above it, and we traded above it. And we got above this overhead resistance area right here at 293.74. We closed at 294.98. So we broke above these resistance levels. We got a long-term weekly overhead resistance level right here at 297.45. Let's see what happens when it gets there. But we got that overhead 50-day moving average that's looking right at us. There's no doubt about that. It's looking right at us. And we go back to the SPY. You see that 50-day moving average on the SPY? You see that downward trending 50-day moving average on the SPY? It's right there. Okay, so the downward trending 50-day moving average can be a problem. Let's go back to the Qs, okay? You see the check-in money flow is still negative for the Qs, the QQQ. The check-in money flow is still negative. Granted, the RSI has gotten back above 50. It's at 53.22. That's great. Well, not great until they get above 60, but that's looking a lot better. Okay, one thing I have to admit is that the green line on the ADX line, the green line, it broke above the red line, and the red line is trending down. Well, we've seen that happen once before right here, where the green got above the red, and then it got rejected right away. And the red moved right back above the green. Let me see if I can expand that a little bit so you can see it. Okay, so the ADX is trying to tell us maybe, just maybe, the buyers is trying to gain control. You see it right here. Okay, see the green line, which represents the buyers, the red line represents the sellers, right? Well, you can see that the green line has crossed above the red today. Okay, and the red line is pointing down. But we've seen that happen once before right here. Okay, where it pops above it for a day, and then it collapses, falls right back below the red, and the red line starts moving up. It's showing us that the sellers are taking control again. Well, let's see what happens. Now, is it going to get rejected and fall right back below the red, and the red get back above the green, showing that the sellers are retaking control? Well, we'll see what happens, but we can't get too excited just because we see this. But look at the yellow line, which represents the ADX line, right? Look at the yellow line. It's pointing straight down. The yellow line tells us whether or not we have a trend. If it's below 20, then you ain't got no trend. It's at 16.28. So even though prices are moving up a little bit, there is no trend. Okay? There is no trend. And you can see it has been moving sideways for quite some time now. There is no trend. Okay, so be careful. There's no need to get FOMO, the fear of missing out. There is no reason to fear. Okay, if we look at before we do that, let's take a quick look at the IWM. Okay, the IWM, it got above its 21-day moving average today also. No doubt about that. And it's coming up upon this downward trending 50-day moving average. Okay, we got above the 21-day and the 5, which is the white line crossed above the green. Okay, but look at the volume. It's not really doing much. Okay, it's not really doing much. Now, the on-balance volume line, let's check that out. That might look a little better for the IWM. Well, does it? Okay, all right. Look at the most recent peak right here. The most recent peak here. Price broke above it. The on-balance volume line didn't. Well, granted, it is above its previous high from back on the 15th, June the 15th. The price has gotten above it, and the on-balance volume line is clearly above it, right? But it's not breaking out to all-time, most recent all-time high. It's not. It's just not really. It's moving sideways. The volume is not really trending up. It's moving sideways. I'm telling you, there is not a whole lot of volume coming into this thing. Look at the price volume trend right here. It's moving pretty much sideways. The only thing that's moving up is the accumulation distribution line. It's really moving up. Everything else is kind of moving sideways, stuck in the channel, along with price, right? Price is stuck in the channel. It ain't really going nowhere. Okay, it hasn't really gone nowhere. You know that by looking at the ADX line. Okay, do the ADX line right here look like it's trending? Let me zoom in a little bit here. You see that ADX line right here for IWM? Okay, let me see if I can find price over here somewhere. Let me see. Give me 1 second. Let me straighten out this chart real fast. Let me bring this down. Okay. Well, you see price, where's price moving up a little bit, but it's not really trending up that hard, right? Well, look at the ADX line. It's moving sideways and it's pointing down. The yellow line is moving sideways to down. Okay. It's at 20.19. All right. So it has to be above 20, above 25 before we can say it's a trend. Well, it's not really no trend. Okay. It's not really no trend there. And the red line is above the green, but it's also trending down. So the sellers don't have full control, but they do have control, but the momentum is not hitting the ball out the park right now. I'm just telling you, listen, you want to be careful. And yes, price is moving up on low volume. Yes, price is breaking above overhead resistance and the horizontal downward trending trend lines. Yes, that's true. But you're coming upon a downward trending 50-day moving average that's right there. Okay? You see that red line right here. This downward trending 50-day moving average is right overhead. Listen, the check-in money flow did turn green today. Let's see if it can stay there. And the RSI for the IWM is above 50. It's at 50.79. So the IWM is trying to do better. The KST has gotten a bullish crossover right here. But I'm just telling you, everything got a downward trending 50-day moving average is right overhead. Look, I will be careful. I'm going to be careful. This is not financial advice. But wouldn't it be wonderful if it was? But it's not. But if it was, at least you know that you would not lose a lot of money. I'm telling you, be careful of this downward trending 50-day moving average. It's right overhead. Look at the ITOT. This is the ITOT right now. So look at that downward trending 50-day moving average right here. The price is at 86.45. The downward trending 50-day moving average is at 88.18. Look at the check-in money flow right here. It's still well in the red. Okay. Listen, price is moving up. Yes, that's true. But it's a lot of overhead resistance out there. I'm going to have to wait until it proves itself. Now, look, we're going to look at the weekly charts on part 2. You see the daily chart. The main thing right now on these daily charts, okay, look at the ITOT today, right? Look at this thing. Look at this thing. Please be careful. No need to fear. The fear of missing out. Look at the volume today. Price broke above the 21-day moving average and moved up well above yesterday. Well, look at the volume. It's low. All right, yesterday was a big volume day, but it's also lower than the day before that and the day before that. Okay? So, look, man, I'm just saying. The volume bars are saying, hey, prices are moving up, but the volume, okay, is moving up on low volume. Accumulation distribution line looks a lot better for the ITOT. Now that I have to hand it. It's pointing almost straight up almost, right? But look at the accumulation distribution line. It's a little distorted. This time, the on balance volume line is pointing up. The accumulation distribution line is barely breaking above its high, and the price volume trend is not even near its high. But the on balance volume is saying, hey, the running total of volume is starting to expand. But look at the volume bars. The volume bars is saying that the volume is not coming in. Okay, let's look at the guppy real quick. You see the magenta line of closing prices is right at those downward trending long-term red moving averages right now. You see that for the ITOT? You see that? What happened the last time we got into these red longer-term moving averages? It collapsed. Well, right now you're testing those longer-term red, longer-term moving averages again. Well, let's see what happened. That's for the ITOT. Okay. Well, let's see what happened. Let's look at the guppy for the IWM. You see it? It's right at the longer term. The magenta line of closing prices is right at the magenta line of closing prices is right at the longer term moving averages. You see it? Okay, we got above the shorter term faster green moving averages, but we're testing the magenta line of closing prices. It's coming right into these downward trending longer term red moving averages. Well, last time we got in there, we found a lot of turbulence. We tried to break above it, and then it collapsed. I'm just saying, listen, y'all, there's no need to fear as far as I'm concerned. If it's going to run and it's going to run up, we got a lot of money to make in between now and then. It has to prove itself. I'm not trying to get in at the exact bottom. You see it right here? The magenta line of closing prices for the QQQs is now inside of the red, longer term, faster moving averages. Okay? But can it get out of it? Okay, can it get out of it? Can the magenta line of closing prices get out of the longer term red moving averages? Well, last time it was in there, you see what happened. Look, be careful, y'all. Look, we're going to look at part 2 right now. Okay? We're going to check out part 2 right now. And let's see what those weekly moving averages look like. Right now, the key thing to look out for is that downward trending overhead 50-day moving average. That is the key thing right now. Is the momentum going to continue to increase? Are we going to get a trend start moving up? Is volume going to start coming in? But what is going to happen when it get to that 50-day moving average, the longer term 50-day moving average? We'll see. I'll see you in the next video.